After the biggest dip in crypto history, it's the biggest dip in crypto history. They've actually confirmed that this dip was the biggest dip in crypto history, over $3 billion worth of realized losses just on Bitcoin. So after this dip, it looks like we're in a recovery. And this recovery seems to feel different from all the other recoveries. It feels like there's a different type of capital in the market and a different agenda behind the money in the market. And that's what we're going to be talking about today. We're going to look at what's powering the recovery, and then we're going to look at the type of capital that's powering it, and then we're going to position ourselves in the best position for a recovery. And when I say best position, what I mean is making the best risk-adjusted returns. And that's a term that we'll talk about a lot today. So it's a massive show today, making sure that we're positioned for the best recovery in this crypto recovery market. So stay tuned in the show till the end, because I'm also going to reveal one huge gem that I think everybody needs to be buying in this recovery. So stay tuned till the end. Welcome back, guys. Welcome back. I'm Crypto Man Run. I'm here 6 a.m. and 10 a.m. EST. I bring you crypto love. I bring you crypto wisdom. And together we are building the best, the most exciting community in the world. And we're so close. We are now 290,613 subscribers. We're so close to 300,000 subscribers. And remember, of course, there are bigger channels than us in the crypto universe. I don't know if there are more loyal channels than us in the crypto universe, because the data shows that you guys are the most loyal crypto community in the world. But we have only been going for 5 months. This channel has only been broadcasting for about 5 months. So welcome to our community. If you're new, hit the like button, hit the subscribe button. You want to know why you should hit the like button and the subscribe button? Hit the like button because that's what shares this content around the whole crypto universe. And we're trying to break records here. Every day, our shows are growing and they're bigger than the day before. And that's just because of you guys and the amount of love that you give us during the stream. So hit the like button, hit the subscribe button. Also hit the like button if you like what you're seeing here, because this is what the recovery is looking like. Now, the reason why I'm so excited is not because it's recovered. Yeah, it recovered better last night. We were at 39,900 or 40,000 last night. The reason why I like this is because my partner here, the sniper, drew this outline yesterday. And you can see, sniper, what's going on in this recovery?
What's up? What's up? It's working good. It's working really good. We're just waiting for the breaker trend to confirm that's the upwards movements, but that's good. And that's what I love about these pullbacks in the market, when we actually pull back and all we do is justify with the trend line. So how do we know when I give you a zone of 35,000 to 37,000? How do we know where it was? You'll actually see how we'll make our way down. Let me show you a quick.
Are you happy that we've hit the bottom of the right shoulder and now we are looking for that breakout? Or do you think there's going to be one more retest of the right shoulder?
Yeah, at any point, if we don't break out this trend now, it can still hover in this and then get the push out. So this is a great indication for us to use on where's the low in the box. How low? Will it go to 35? Will it go to, where do I buy? And the confirmation buys are always in the trend. So until we've broken out that zone, the higher high, there's another. They're all over the place. These inverse head and shoulders. So it's a very nice little pattern to learn to help you.
The freaky thing for me is that it's following your plan exactly. It's almost like you wrote this plan. And for me, it's freaky, man.
Yeah, me and Elon been chatting a little bit on the side.
Thank you, my brother. We'll see you in a bit. We're going to talk about
somebody.
Today is all about recoveries, guys. And if we are going to speak about recoveries, it would be amiss of us not to speak about Fred and Fred's dad. Fred's dad is making an amazing recovery. Fred has recovered. So Fred is recovered. He's actually in the background driving here. I'm actually going to bring him onto the stream. He hates it when I do this, but Freddie, we're so happy that everyone's recovering. How are you feeling, brother?
I'm good. I'm so much better, Ron. Thank you so much. Yeah, it's been a rough couple of weeks. I wish COVID upon absolutely no one. It knocked me off my feet probably about 100 times worse than I thought it would ever be. But I'm good. I'm stoked to be back at work. I'm stoked to be working again. I'm stoked to be back with the team, and so much going on, so much to cover. So yeah, very exciting. And thank you all for the amazing wishes. I just want to take the time to just say thanks for all the messages on Twitter. There's a lot, and I'm not going to get back to everyone, but all received, all the good vibes, all the good energy. You guys are amazing. I love you all so much. Thank you.
Thank you, Freddie, buddy. And more importantly, how's your dad in one line? Is he getting better?
he's getting better, slowly but surely, but every day is progress, and that's all that matters. He's going to get there.
You know, it felt to me at one point like he was doing a head and shoulders recovery. He was recovering and then he went bad, and now it seems like he's on the recovery again. And I'm so happy to hear it, man.
He just broke through resistance last night, so I think probably in the next couple of days he'll be back into price discovery. He's getting there.
Amazing. So, guys, again, we are the tightest community in the world. Welcome to our community. If you're new, join us. Just subscribe to our channel. Hit the like button to share this content. And I'm watching the likes. Guys, there are 9,000 of you in the stream, which is quite a few less than what we usually have, and there's 3,700 likes. Smash the like button. It costs you nothing, but it helps us get this content out there, and it helps us bring you amazing things like, for example, the Banter bags. We are the only people in the world that bring you the Banter bags. What are the Banter bags? Well, we've started a new Banter bags. And what we did was we invested $10,000 in pre-market allocations. When we get to 500,000 subscribers, we are going to give these bags to the community. In the last Banter bags, we gave away almost $700,000, depending on the token prices, to members of our community. And this time we're hoping to give a lot more to our community. So like, subscribe, share, comment, follow me on Twitter, follow Sheldon on Twitter. If you want to follow us on Instagram, that's the only way you guys are going to get into the free, I said it, free crypto school. Crypto school is free. So if you want to get into crypto school, go to the Instagram page, like, comment, share, subscribe, do whatever you need to do on the Instagram page. That's where we are selecting the winners for crypto school. So again, just get involved in our community. Just one more note before we go into the big show of today, and that's around scammers. We spoke about scammers earlier, scammers purporting to be me or Sheldon. There are scammers in the community. They're in the comments, of this video. They're even in the adverts before this video. I don't know how, YouTube, so negligent. They won't let you do any crypto advertising. God forbid you should do crypto advertising, but if the scammers want to advertise, that's okay. Anyway, we did have someone who claims to be sick. He claims that he was scammed out of $20,000 or £20,000. And he did this from the credit card. He got a hold of us last night, and the guy sounded desperate. So we set up an ETH fund, which I posted on my Twitter if you guys want to help him. Now, just to be clear, before we pay 1 cent out of this ETH fund, we are going to verify the money went out of his bank account, which obviously he cannot reverse now. And we're going to verify that indeed this person is ill. And if indeed this is the case, then we will help a community member. But it's the last time we're going to help a community member who was scammed, because we're not a scam relief service. Like, guys, you've been warned. Do not give anything to people in the community. The more money that's made in crypto, the more scams they're going to be. And they purport to be us. Someone once said to me that he's got more run scam followers on his Twitter than he's got normal followers. So just be careful out there, guys. It's a war zone out there. And the more money that there is in crypto, the more money that the scammers are going to want to do. All right, let's look at the show today. So massive show today. We're going to talk about recoveries. We're going to talk about the Elon tweet. Let's talk about the Elon tweet now. So this Elon tweet yesterday shot the markets up yesterday. And what he said, spoke with the North America Bitcoin miners. They committed to publish current and planned renewable energy uses to ask miners worldwide to do so, potentially promising. And it seems like the acting CEO of Bitcoin, as I call him. So I call Michael Saylor the acting CEO of Bitcoin. But he said, yesterday I was pleased to host a meeting between Elon Musk and the leading Bitcoin miners in North America. The miners have agreed to form the Bitcoin Mining Council to promote energy usage transparency and accelerate sustainability initiatives worldwide. This is hugely positive, because we took an attack on Bitcoin and we turned that attack actually into an advantage. So what happened was Elon Musk attacked Bitcoin, and he attacked it in public. And, when the richest man in the world, a CEO of a leading renewables energy company, a CEO of probably some of the most exciting technological companies in the world, questions the sustainability around Bitcoin mining, then that is a bad signal to any other CEO. Because if you think about it, other CEOs out there, right? They look at this and they're going, look, we can't be buying Bitcoin. If Elon Musk says it's bad for the environment, then we can't be buying Bitcoin. It just looks bad for us. And the problem is that all these big corporates are run by boards. And if you do something against the board, it could be deemed as negligent. And I don't know if you ever interacted with board members, but board members are a very unique type of person. They're like this straight down the line type person, like Parat, who effectively earn their keep or earn their money by being straight down the line and keeping the company on track. And kind of like in a board meeting, they score more points by raising points to keep the company safe. So what do I mean keep the company safe? Make sure the company doesn't do stupid shit. And the problem is that after Elon Musk announced this Bitcoin not bad, not great for the environment type thing, what he did was he sent a message to every single board member in the world to say, look, at your next board meeting, when they bring up whether or not you should put Bitcoin on your balance sheet, the answer is no, because it's not sustainable. That was actually a massive threat. But the reason why I'm excited is because it seems to be turning. And the reason why I say it seems to be turning is if you look at the Michael Saylor tweet, which I'm sure Freddie at some stage will call up, he says, the miners have agreed to form the Bitcoin Mining Council to promote energy usage and transparency. Now, this has also been coupled with what's been going on in China over the last few days. Now, we know that China's got a mining monopoly, or not a monopoly, but certainly a huge majority in mining. And it seems, if the rumors are true, that China is actually really this time clamping down on Bitcoin miners. So we're kind of getting a win-win. And the reason why I'm so excited is because if you think about Bitcoin since 2008 when Bitcoin launched, or 2010 when Bitcoin launched, every time there is an attack on Bitcoin, Bitcoin survives, and every single time it actually comes out stronger. That is why Bitcoin is indestructible, because every time it gets challenged, it puts up another shield and it gets stronger. And this has been happening mainly in its software for the last couple of years. And now you look at what's going on in Bitcoin, and the last attack that Bitcoin sustained was a sustainable mining attack. What's Bitcoin doing now? It's fighting back. And I think that in time, Bitcoin will move out of China, and I think it will be mined with renewables. And I actually even think that Tesla will lead the way. So in a very strange way, I actually think that Elon Musk, I don't want to say orchestrated this, but I think that there is some play here where Tesla is going to emerge as the heroes of sustainable mining around Bitcoin. So that's the good side of the Elon Musk tweet. The bad sides for me around the Elon Musk tweet are that he's become a puppet master for the crypto world. And he seems to like play with the crypto universe through tweets. And he knows he's doing it. I mean, that tweet where he said Tesla's got diamond hands. What is that? That is him realizing what he did, realizing that he hit the crypto market too hard, realizing that many people are losing a shitload of cash, and saying, look, I better do something. My board members are shouting at me. My investors, Kathy Wood from ARK Invest, is shouting at me. I better do something. And then he said, well, you know, a Tesla has diamond hands. That's Elon Musk's response. What I didn't like about his tweet yesterday, and it seems to be a pattern that's emerging, is that every time he tweets something about Bitcoin, and here he tweeted, spoke with the North American Bitcoin miners, they committed to publish current and planned renewal, blah, 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 blah. The next tweet is, if you'd like to develop Doge, please submit ideas on GitHub. Now, this is no joke, and I'll tell you why this is no joke. If you go to the Doge GitHub, there are 2 million members in that Doge GitHub. So if you look at this, I mean, I'm not joined on this one, but it has 2 million subscribers on this Doge GitHub. So, I mean, there are two options here. Either he is, again, messing around, or there is much more to it than this messing around that he claims that he's doing, and that he actually is on a mission as a joke, as a hobby, to actually promote Doge. And I mean, it sounds like the most crazy thing. If you understand the technology behind Doge, it just sounds like it's the most crazy thing. So let's keep watching what Elon's doing. But I think that because of Michael Saylor, the acting CEO of Bitcoin, I think that we could come out stronger. In fact, I think this is one of the turning points of Bitcoin. This is one of those big attacks in Bitcoin. I think the other one of the attacks was when BCH forked out of Bitcoin, and we had the Bitcoin fork. So these attacks actually just make the Bitcoin network much stronger. And I think that this network is going to come out much stronger. So two other things that I want to talk about today. I want to talk about Ray Dalio. Everyone's been talking about the Ray Dalio video, right? But I don't think that everybody actually heard what Ray Dalio said. I think that's the big part. Then I'm going to show you guys a few gems that I'm buying in this recovery. And I think in the recovery, what we need to be doing is we need to be buying risk-adjusted returns, because now everything is away from the all-time high, right? Like the all-time high was ages ago. It's not, everything's come down. And the idea is to buy things that will not only go up, but the market continues to go down, will actually sustain themselves going down. And that's what we call a risk-adjusted return. We need to not buy things that are going to give us the most upside, but buy things that are going to give us the more risk-adjusted upside. In other words, enough upside for the risk. So what I'm going to do today is I'm going to show you a few gems, but let me just find this here. There is one gem, there's one gem that, I don't know, I bought. I'm going to be blunt with you guys. I bought because I didn't want you guys to front run me, because if I tell you that I'm buying, you guys always front run me. So full disclosure, I bought this gem. I'm going to announce this gem to you guys. In fact, you know when I'm going to announce it to you guys? When we get 10,000 likes. We're on 5,800 likes. When we get to 10, no matter what happens in the show, when we get to 10,000 likes, I stop whatever I'm doing and I announce what this gem is. Deal? Cool, deal. That's it. 10,000 likes. You guys on your way. 5,800 with 15,000 people watching. Let's see if we can get to 10,000 likes. When we get to 10,000 likes, I stop whatever I'm doing. I stop, and I tell you. And my timekeeper here, Sheldon, are you watching the likes, brother, man?
I'll keep eye on the likes, buddy. And I'm watching Bitcoin go up. Lovely view. What a view.
That's it. The head and shoulders is going to complete.
Yeah, then we're going 42, 41 to 43 in that region. Yeah, next target.
Amazing. So I want to actually, we'll bring you back in a sec, Sheldon. All right, let's talk about big news. Let's talk about the recovery. Market collapsed. Biggest market collapse in the history of Bitcoin. Maybe not in percentage, because a lot of people argue that from top to bottom we've had bigger corrections. But in terms of the value wiped out, and when you talk about value wiped out, you talk about the net realized loss. What is the net realized loss? This is the number of people that actually took their loss. Yeah, realized their loss, right? In other words, sold. This was the biggest correction in Bitcoin's history by far. Now, we're seeing a correction now, but this is not an ordinary correction. You can see the correction in Sheldon's charts, which I'll show you right over here. You can see it's playing exactly to what the charts are saying, but it's a different type of correction. This correction is being driven by a different type of investor with a different type of capital. And the reason why that's so important is because you need to understand that this investor actually has a different agenda. They don't want the same recovery as we had before. They don't want the same tokens to recover. They don't want Bitcoin to recover as quickly. And that's why when our friend George, and George is really one of our good friends in the industry, he said that Bitcoin's going to get to 50,000 by Friday. I don't know if that's going to happen. The reason why I don't know if that's going to happen is because when you look at the data behind this recovery, what you will realize is that this recovery is being driven by a unique capital. What's telling me this? Let me show you. When we started to recover, we saw something that I have never seen before. No coiners taking the opportunity to buy the dip. So what actually happened? You had a collapse. And when this collapse happened, you had no coiners getting the opportunity to buy this dip. Now, for those of you who've been here for a while, have you ever seen a dip, the most brutal dip in history, and at the bottom of the dip, no coiners, people who've never held a coin in their lives, start buying Bitcoin? We've never seen that before. Usually when Bitcoin goes down, people run away. This time, we saw something absolutely completely different. We saw no coiners taking the opportunity to buy this dip. And so what Willie Woo says, he says, by the way, a key observation here is that this is not looking like a 2013 double pump. It's so far playing out structurally like a COVID white swan, where people on the sidelines took the opportunity to come in. That's exactly what's happening. It points to two things. It points to the fact that we're going to get a V-shaped correction like we had from the COVID-19. And that's what I said to you guys the other day. We are going to have a V-shaped correction for this dip. The second thing is, which is exactly what he says, there were people on the sidelines who took the opportunity to come in. Who are these people on the sidelines who took the opportunity to come in? I can tell you for sure it wasn't the retail investors. There were no retail investors sitting on the sideline with money waiting to come in. It was the institutions. The money that came in was the institutions, not the retailers. Retailers didn't sit there with money. This time, after so many years, the money that came into crypto during the dip was actually the institutions for the first time that I can remember, certainly since I've been here. And that means, I mean, I've been here since 2014. What does this mean? It means there's a different capital in the market. This capital doesn't sell coins every time the market goes down. This is a capital, this is an investor that holds their coins for a long period of time. We saw this also when you looked at the GBTC premium. And I want to show you this. The GBTC premium, in fact, Freddie, if we can drop that chart, let me actually go to the actual GBTC premium. You'll remember that I told you that if you wanted to buy Bitcoin, the best time or the best place to have bought Bitcoin was actually to have bought it when there was no demand, and to buy, instead of buying Bitcoin, to buy the GBTC trust. And if you look over here, I told you to buy this at about a 20% discount to net asset value. What that means is that you were buying Bitcoin, because all this trust holds is Bitcoin, at a 20% discount to net asset value. Now that premium has now closed to 3.86%, which means that if you had bought this, not only would you have made the money on Bitcoin, but you also would have made the money on the premium. So you could have made an extra 14%. That's what I told you guys to do. You would have made an extra 14% if you had just listened to good old Uncle Ron. What is that showing us? It's showing us that the institutions are starting to buy. It's the institutions that usually buy the Grayscale product. They're not buying it from Grayscale directly because there's a discount on the market. So they're snapping it up from the retail hands in the market. Again, soft retail hands selling spinach retail hands. Yeah. If you sold, you are spinach. Spinach retail hands selling to the institutions. And the institutions are taking it off exchanges, and those tokens will never, ever be seen again. Look at what's going on the over-the-counter market. The over-the-counter market, the numbers are also showing us exactly the same thing. Whales are taking money. Look at that. The total transfer from the OTC market. Look at that yellow line. It's showing that the coins are moving from the OTC market into the long-term wallets. So who's buying this dip? Guys, it's very simple. It's the institutions buying this dip. Why are they buying this dip? Well, I'll tell you why they're buying the dip. They've been sitting on the sidelines with cash. They were scared to get into Bitcoin because they said, look, it's gone up too much. Bitcoin's gone up too much. We can't get into it. We're going to wait for a dip. Then the dip came. And they jumped in. They aped in. Okay, now, for those people who sold, let's ask a serious question. Like, if you were one of the spinach that sold, say you were spinach and you sold, what are you going to do with the money? Are you going to hold fiat? Look, so I don't know if you guys know Leia Halpern. I don't know if you know who she is. She posted a video this morning. I wonder if we actually have that video. Listen to this.
Okay, so the governor of the Bank of England called cryptocurrencies dangerous, and he said that he's skeptical about it. But there's actually nothing more dangerous than your very own money losing value. So let's take a look at the pound. So this graph, if I move myself out of the way, shows you the purchasing power between 1860 to 2021 on the right hand side, and how it's declined over the last 161 years. So £1 back in 1860 is actually the equivalent to £124 in 2021. This is actually an average inflation rate of 3.04% over the last 161 years. This means that £1 today could only get you 0.8% of what it could have gotten you only 161 years ago. It's really not that long ago. So I gotta say, I'm a lot more skeptical about the purchasing power of the pound, and this devaluation looks far more dangerous.
I agree. I think holding US dollars is the most dangerous thing in the whole world. And everybody's starting to realize that. Even the biggest skeptics in the world are starting to realize that, I'd rather be anywhere than be in cash, because cash is the most dangerous asset. And we're going to talk about that. We're going to talk about the Ray Dalio thing. But I want to talk to you guys about our good friend, Mr. Wonderful. And in fact, I want to play something. Just let's listen.
Mr. Wonderful thinks it's worthless.
Well, I
called it garbage this morning.
I want to explore the idea. Yeah, I did say that. I want to explore the idea that there's nothing here except raw speculation. Mm-hmm. No different than when I go to Las Vegas and put my money on black or red on a roulette wheel. Because where is the intrinsic value inherent in deploying real capital? Let's talk real money here, and putting it into Bitcoin as a storage of value. I get gold. For 2,000 years, including the Romans, they saw value in owning that as an asset class. Tell me why this, which is basically a digital game, that's the way I look at it, has any intrinsic value. When people actually put real money into this, they make no interest, they can't pay their taxes with it, the regulators don't like it, which is always a problem for compliance. And where's the long-term value? Just this idea that they're going to cut the number of units in half, such a scam.
Yeah, that scam. Remember that guy who called Bitcoin a scam? There are many people that call Bitcoin a scam. This is what he's talking about today.
1 to 10% is kind of the band.
10's up there, Bob.
5%
for an institutional investor. 10 is up there.
Yeah, of course.
Right now, that number for the big guys is 3%. They're happy and they want Bitcoin. They haven't gotten past that yet. So let's say in my case, my DeFi company, of which I'm a large shareholder now, I say to the guys, look, let's put a bunch of crypto on our balance sheet. All right. I'm going to own a third of that balance sheet or whatever I own of the balance sheet. I want you to loan that out and get me between a 4.5% and an 8% yield.
Yeah, it's basically yield farming. What you guys are going to do is yield farming.
And then others that are interested, like I am, on taking their asset, and imagine if I could have, over these years, had a 5% yield on my gold. That would have been incredible. Well, I can on my crypto. So that's really what I'm doing in DeFi. And I think I've got the best team in North America. Everybody says that, but I'm backing this team because I've done a lot of due diligence on them. And I think, in the next few months, that will become part of our portfolio with a yield metric to it.
You're going to keep the assets denominated in the asset, right? Yeah. So let's say, just for easy things, you have 100 ETH. You put that in, you want 8%. So now you're going to end the year with 108 ETH.
Staying in ETH.
Regardless of, did the price go up or down?
I might go back to fiat to just pay some expenses, but I'm going to stay in ETH on that balance sheet. And you as a shareholder, go with me in the share price as my assets grow.
So I guess that Mr. Wonderful has become a farmer. He's farming with us. He's yield farming with us. That is what's been happening. It's the institutions. And if you listen to what he said, he said in the beginning, it's all Bitcoin, but then he started talking about yield and DeFi. And if he's talking about yield and DeFi, then he's actually talking about Ethereum. And that's what he doesn't understand. This is the same person that called Bitcoin a scam and funny money. And if you clicked before him, that means that you are clicking way before the institutions. It means that you are here early. If you're here with us and you've been following us, you are here early, because he, to me, represents the front end of the institutions, the more experiential, the more experimental of the institutions. Now, I want to play you another video from that Pump podcast. I think it's you have to listen to how these institutions are thinking, because that's going to give you clues as to what's going to recover.
Once you leave fiat into crypto, you don't go back.
I don't want to go back.
Okay.
Why would I? Because we've had a correction. You can't call that's a correction. We just had.
Well, I mean, look, in 2017, there was 6 over 30%, I think, right? There was 240% drawdown. So it doesn't feel good, right? When the asset draws down, but it's not atypical for the kind of historical bull runs, right? Which, again, if you tell in the traditional world, hey, there's going to be 240% drawdowns, but you're going to go up 20x in a year, they're like, I'm out.
Well,
right? They're like, I'm out of this.
but in this case, you end up with more coin after that correction. And then you're out loaning it out and you're getting and with that volatility, you just got 200 basis points more yield. People don't understand vol is good for yield. It's not good for your stomach, but it actually helps you mine yield from your crypto.
He is talking about becoming a yield farmer. He's talking about applying Sheldon's strategy and actually becoming a farmer. I mean, Kevin O'Leary. And guys, we've dropped this for you guys in the Instagram. We've dropped this for you guys on Twitter. Put your face on, join us. Join the strategy. Let's farm. Let's have some fun. But what we're seeing is that the institutions are seeing the light. They're seeing that once you go out of fiat into Bitcoin, and remember, this dip was bought by the institutions who are sitting on the sideline, you will never go back to fiat. That's what he said. And then you're looking for yield. And these guys who are getting 3 and 4 and 5% on corporate bonds and whatever else, 2, 3, 4%, not even, are now seeing the returns they're getting in crypto. They're never going to go back, which means the coins that we sold, or that you guys sold, I didn't sell any coins, I just bought. The coins that you sold landed up in their hands. And that capital structure is different. The other thing that I think that a lot of people are missing is that it's actually not Bitcoin leading this recovery. It's actually ETH leading the recovery. And I don't know if you saw, but yesterday, in fact, let's call up the ETH chart so that you guys can see the ETH chart. Okay, let's have a look at this. So look at the recovery yesterday on ETH. From bottom, from 1,700 all the way up to 2,700. That's a much bigger recovery than Bitcoin had. So I think while everybody's looking at Bitcoin for the recovery, this recovery is actually being led by ETH. And I'm not the only one who thinks so. Goldman Sachs wrote a report, and we have the person on the line who actually was the first person to talk about the leaked Goldman Sachs report, where they talk about crypto and specifically where they talk about ETH. And I'm going to bring him on the line. His name is Santiago R. Santos. He is a DeFi investor, he's a DeFi thought leader. I think he's an all-round interesting guy. Santiago, how are you, my friend? I think you are muted. I think you muted your mic on the console.
Oh, yeah. Hey, how's it going? It's great to be here.
Good, man. So you were the first one who published anything about that leaked ETH report, the Goldman Sachs leaked ETH report. What did you find in that report that you thought was so much worth posting?
Well, I think it's interesting that large institutions understand the value proposition of Ethereum is much different than Bitcoin, right? Because and we've seen it as well. You saw JP Morgan post a report, I think it was last month, talking about how different Ethereum is. Ethereum is not, Bitcoin's a commodity. Like, we understand it's digital, but Ethereum has much more applications to it. I mean, it powers all of DeFi, it powers most of the NFT activity, and I think funds like Goldman and JP Morgan understand that and say, well, what's really stopping Ethereum from being much larger than Bitcoin? Because it is not just pretending to be a credible store of value. It actually is the substrate that powers an entire economies, which are growing quite substantially. And so to me, that was interesting. To your point, right? I mean, you're talking about institutions like JP Morgan and Goldman that not too long ago were very dismissive of the general, and now are producing what I think is pretty interesting research on Ethereum.
Well, they said in that same report that Bitcoin is now an asset class. They said that Bitcoin is an asset, which is the first time that they've come out publicly and said that Bitcoin is an asset. They've said that Ethereum is possibly going to be bigger than Bitcoin, and I think they put some price speculation in that on Ethereum. What was the price speculation?
I don't recall the exact price that they were giving, but it just said it could be much larger than Bitcoin, and it could be a better store of value because stores. The interesting idea that the Goldman report suggested was, stores of value are not valuable purely because of a fixed supply. They're valuable because they have underlying demand behind them. And when you think about the utility that you have with Ethereum, it's like the demand for ETH will only be probably growing at a much faster rate than Bitcoin. When you think about, you need ETH to interact in this entire economy, which keeps growing. Whereas I can't remember the last time I actually used my Bitcoin other than hoarding it. But every day we use Ethereum to actually, interact in DeFi or NFTs or what have you. So I think that was the interesting observation. But if you think about the actual flipping, well, you can come to a price which is, much different than what it is today.
So the reason why I think what I read in between the lines there was they were almost saying up until now, you haven't been able to use a store of value. You've had gold, gold's been a store of value, but you actually haven't been able to use the store of value. They're saying that Ethereum is the first time that you can actually use your store of value. So you've got this like limited supply scarce asset that is being used every single day on millions and millions and millions of applications. What they didn't talk enough about was EIP 1559. When you talk about a scarce asset that is a store of value and increasing in usage every single day, and then you start removing the supply from the system every time it's used, it becomes a mindfuck. I mean, I don't know any other way to say it.
No, I think so. Like, the biggest criticism that we've heard on Ethereum since day one is, hey, what's a fixed supply? We don't know what it is. It's difficult. It's not. This is not a store value, and this is coming from a lot of the Bitcoin camp, which I understand, right? But you're right. EIP 1559 is slated to go in the London upgrade, which is July, I think 16th or 14th.
Yes.
I think people will start realizing the quantity that is going to be burned at the current pace of Ethereum miner fees and say, and I think when you see the first burn of ETH, once CIP 1559 goes live, I think it will click for many people. It says, oh, okay, not only is the inflation rate, like the issuance rate declining, but the actual supply is being reduced because of the level of activity in this network keeps growing at a very fast clip.
So do you agree with me that it's actually ETH that's powering this recovery, not Bitcoin? Like, I get the feeling that ETH is actually more important in this recovery than Bitcoin.
Yeah, I think so. I mean, I think the market was testing in some capacity, like, can you truly decouple from Bitcoin? Because in prior cycles, when Bitcoin, Bitcoin really was the one that initiated a cycle and ended a cycle in some capacity. And it was interesting because obviously ETH has really outperformed Bitcoin since March. And I think the market was truly kind of testing that decoupling. Of course, we saw sort of a round of FUD around Chinese miners and the ESG narrative. And I think, that inherently just trickled down to the entire market. But I think that shift in the market around ETH and the dominance of ETH is real. I think it's the institutions, especially newer institutions, that I talk to, like, these are tech-focused funds and hedge funds, don't talk about Bitcoin anymore. They care about Ethereum for a number of reasons. And to me, that's interesting. Like new capital in. And I guess the other data point is, so yesterday, I believe, when you saw this big rally in the market, there was much more volume in ETHE than GBTC.
Exactly.
And this is and to me, that's sort of indicative of new capital flowing.
That is exactly what Michael Sonnenschein sent. He sent out this thing saying, interesting to see that ETH notional volume eclipses GBTC. So this recovery is actually being led by Ethereum. Now I'm going to throw something else at you. I'm very interested to hear your thoughts here. Mm-hmm. I think that the recovery is being led by Ethereum, but I actually think that more important than Ethereum in this recovery is actually Polygon or Matic. And the reason why I say that is because I think that not many people are building on Ethereum layer 1 anymore. I think it's prohibitive. They realize that the gas fees are going to be too high, and they're going to be too high for a while. And they're opting to buy something else other than Ethereum, but that is related to Ethereum, or should we call it a derivative to Ethereum? And I think that derivative to Ethereum is Matic. And I think we saw it, if we look at the recovery of Matic yesterday, I want to show this to you quickly. So this is the Matic recovery. I mean, let's quickly just look at it. You've got from a low of 72 cents to a high of 198. It's over 100%. It's still sitting over 100% recovery. Not only that, every single token in the Matic ecosystem, and I mean, again, let's look at the numbers. Went up 218, DeFi went up 218%, Matic went up 160%, QuickSwap went up 109%. What this is showing me is that actually it's Ethereum, and right now people are using Matic as a proxy for Ethereum, and a good proxy for Ethereum.
Yeah, I think so. Certainly the level of activity in Matic is being, to your point, like it became prohibitively expensive to use Ethereum, but Matic is a side chain. We've gotten a lot of activity, like Aave deployed in Matic or Polygon, what was it, last month? And it saw number of users 2x in the first 48 hours of deployment. TVL grow pretty substantially. I forget the latest figure, but that's sort of foreshadowing the level of activity that you're probably going to see in Ethereum once other layer 2s go live. Like Arbitrum is launching this week, which is an L2 similar to Optimism, fully EVM compatible. And then you have Optimism launching later this summer. And so I think the combination of those two plus EIP 1559 really sets the stage for, I think, like to your point, there are a lot of users that went to Binance Smart Chain or other chains because it was super, super expensive in Ethereum in layer 1. So that certainly, like, I think Matic is foreshadowing like the level of activity that you can have in Ethereum in that network. And again, combine that with the EIP 1559, where as more activity in the network increases and more ETH gets burned, I think people are slowly kind of understanding how all these pieces come together for Ethereum.
I must say, I think that the recovery is an ETH-led recovery. I think that it's such an ETH-led recovery that the best play in the recovery is actually Matic. So for me, what I'm doing is, instead of buying Ethereum, if I see that Matic has gone much lower, which is exactly what I saw, I just bought Matic, and I bought the Matic ecosystem because I think, again, it's high. It's like a spring. It goes up higher and it goes down lower. So if you want to buy a recovery stock that is in my recovery token that is relatively safe for me, that's the one I buy. I buy Matic. Yeah. Cool. Listen, Santiago, first of all, thank you for breaking that report. That was amazing. For those people who don't follow you on Twitter, I just want to read out your Twitter profile. In fact, Freddie, it's at SANTIAGOROROEL. Freddie, just put it up in the comments so that people can follow him. Thank you for coming on the show, man. Thank you for giving us your input.
Yeah, great. No, it was great to hear, and hopefully it was helpful. And yeah, good luck to all of us. Yeah.
Thank you, buddy. Thank you. So, guys, it's an ETH recovery. Oh, look who's here.
Sorry, I had to let him finish. But that 10K was hit, and everyone is excited. I had to do it.
Yes, we did right now, right? I was going to talk to you guys. I've got Sheldon. I've got Rudo. I've got Rudo in the waiting room. I've got to talk to you guys about Ray Dalio. But stop everything. I told you guys I would, if we get 10,000 likes, and if I could just get the sun, it's going to go behind the mountain in any second now. So, I said to you guys that I want to reveal one gem to you guys that I'm buying in this dip. And I'm going to show you guys why we're going to be buying this gem in this dip. The idea behind buying gems in the dip is to buy gems on what we call a risk-adjusted return, right? So we want to buy gems that have a better return on a risk-adjusted basis. What we want to do is we want to take less risk and get a better return. Sorry, I'm just moving around so I can try and get out of the sun here. I see that Sheldon's running to my rescue. Don't worry, Sheldon, it's all good. So you want to buy things that are going to perform on what we call a risk-adjusted return. You want to take the least risk and get the highest possible return. That's what it is. And if you have a thesis that the market's going to recover, what you're going to be looking at is you're going to be looking at protocols that are in a good narrative, that are smart, that are utilized, where smart people much smarter than you or I have invested at much higher prices, because it's almost like, imagine getting into these protocols when nobody else or before the big investors, before the smart investors. Just give me, yeah. So before Sheldon wants to put up something to block the sun, it'll be gone in a second. So you want to buy these risk-adjusted return gems. And today, I think I found one for you guys. And again, it is still risky because if we have a market correction, it's going to go down. It's not one of these gems that are called, and I said to you guys that we have to be looking at, which is, I see the shopping list has already been removed. But it's not one of our shopping list coins. It is a coin that is much, much, much more speculative. But if we get a recovery, then I think that this one may actually explode. So let me tell you what it is, because I know I'm keeping you guys in suspense. I see Sheldon. Sheldon, are you trying to buy there? I see he's muted himself.
Oh, there you go. Maybe.
I can see Rudo and his machine trying to buy there. Guys, I don't tell you guys the trades anymore because you all front run me. So in full disclosure, I have already bought this token. I bought the token before the show. So, well, all day I've been buying it. So you know that, and I've probably paid the same price that you're going to pay if you buy it now. So the token that I bought is a token that we have spoken about. It's a smaller, more risky token, guys, and it is in the narrative of DeFi, and we think that DeFi is going to explode. That is exactly what Mr. Wonderful said to you guys. The token that I bought is Saffron Finance, SFI. And I bought it on Uniswap. You can buy it on Uniswap or SushiSwap. And the reason why I bought this token is as follows. 1, I'm a big believer in DeFi. 2, what Saffron Finance does is it allows people to get a risk-adjusted return in DeFi, which means that, as it says here, Saffron is an asset collateralization platform where liquidity providers have access to dynamic exposure by selected customized risk and return profiles. What it allows you to do is it allows you to get better returns, stable returns. In other words, to take away the volatility of returns. Now, if you know anything about yield farming or DeFi, what you will know is that the yields vary quite a lot. And for institutional investors, varying yields don't work. Okay, varying yields just don't work. They need to know what they're getting themselves into so that they can commit to their client base. And that is why I think Saffron Finance is going to explode. Now, why now? Why did I buy it now? Well, I took one look at the Saffron Finance chart, and I want to show you guys this. I'm going to show you my research. Guys, you do what you want. I'm just showing you why I have done what I have done. And I have done it, so I'm putting my money where my mouth is. The all-time high for this token was somewhere around 3,000. I think maybe even higher, 3,000. Let's actually have a look at this. Let's have a look let's see, where do we get this off coin? Let's have a look here. Historical data. Let's have a look. I think that's going to give us, actually, let's go one back and we can look at it here. So the all-time high for this protocol, it's somewhere around $3,000. I actually thought it was higher than $3,000. I thought it was about $4,000. Let's have a look at this. All-time high, $3,496. You can have a look at it here. So $3,496 is the all-time high for this protocol. Today, without any hacks, no compromises, nothing like that, the token is trading at $400, which means it's trading at 14% of its all-time high, which means for me, it's at a bargain. Not only that, I remember Kyle Samani, who's one of the people that I respect most in this space. Now, he tweeted on the 8th of March, he tweeted, "We are excited to announce that Saffron Treasury has been diversified by adding strategic partners to enable migration of traditional finance. And it's the first time that Multi-Coin Capital, Meltem Demirors, Coinbase, all of these guys backed Saffron Finance." Now, the date of this tweet is 8th of March. Now I go back to Saffron Finance and I say, hold on a second. What price did these guys get in at? Now, they obviously announced it on the 8th of March. And if they announced it on the 8th of March, they probably bought it a little bit before, right? Like they wouldn't have announced it on the day that they bought. They probably would have first bought and then they would have announced, right? That just makes much more logical sense. So I look in February. In February, the price was 2,560 and the price hopped around between 2,560, 2,7, all the way up, 2,5, all the way. And effectively, I don't believe that these guys got in anywhere near $400. In fact, the last time that this token was anywhere near $400 was in January. So for me, when I take all those things into account, I say, hold on, I believe in DeFi. I believe in this protocol because I know what this protocol does and I know that there's a massive use case for this protocol. We've had a correction and this token is 85% off its all-time highs or 88% off its all-time highs. For me, that's like a buy signal. That's when I say, okay, hold on, you got to buy this thing. And that's why this afternoon or this morning before the show, I went into Saffron Finance. Do your own research, guys. I'm not telling you to buy it. I'm saying to you guys, I have bought it. Go and do your own research. Okay, so you guys stopped me, but now let's get into what we're actually going to talk about. We were going to talk about Ray Dalio and Ray Dalio going out and buying Bitcoin. It was big. It's big news. Everybody in the crypto, in the entire crypto universe is talking about Ray Dalio actually buying Bitcoin. Who's Ray Dalio? Why is this even such a big deal? Well, he's a billionaire. He's the founder of Bridgewater Associates, which is the US's biggest hedge fund. Okay, so this is the guy that runs the biggest hedge funds in the United States. And his hobbies? Buying Bitcoin on the dip. This guy bought Bitcoin. He spoke yesterday at Consensus and he said that he bought Bitcoin. That is what everybody has told you. What they haven't told you is why he bought Bitcoin. Now listen to what he said. This is the important part. Listen to what he said. Let us find this.
But I don't know whether you guys have actually bought any Bitcoin, but I certainly know that you're interested in it. We've certainly
I have some Bitcoin.
Three major reserve currencies all have the same basic problem. That's why they move into a new storehold of wealth. And you see that the storehold of wealth, like in 1933 reaction, is equities, is gold, is other asset classes that go up. So when you buy a company and you have low returns on your bonds and so on, that is that kind of movement, but the same is true for gold and other asset classes. If that gets too far, and it's standing the risk of, it's very dangerous. It looks like a currency defense. In other words, if those who are holding bonds, which are a lot, choose to sell the bonds because they're not providing a good return, and they're not, and because there's so much debt production and debt monetization, that puts the Federal Reserve or other central banks in the very difficult position of operating like a currency defense. Mechanistically, as money leaves that debt, that means either interest rates would rise, which would be terrible for the economy and markets, or they're forced to buy more and more. And that is how a spiral could occur.
So listen, that's the first part of what he said, but now listen to this.
I don't know whether you guys have actually bought any Bitcoin, but I certainly know that you're interested in it. We've certainly
I have some Bitcoin. I think Bitcoin's greatest risk is its success. Because as it becomes more, right now, it's not such a big deal. And, you know, fighting it is more of a big deal. And that's it, because it's not that big a deal. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin. And they want to do that in a bigger way, like buying gold or something in a bigger way. And then there's more transaction. They lose control over that. And that's an existential risk.
Okay, listen to what he's saying. Read between the lines. What he's saying is that right now governments don't really care about Bitcoin. I think they're starting to care. But as more people realize that they can get more yield in Bitcoin. Now, when they talk about yield, they talk about the coupon payments. Now, there's many high coupon payments in DeFi and in Bitcoin, which is exactly what he's talking about. But in Bitcoin, you've got an asset that's appreciating, that's going up in value, and you can get more yields. Now, what he's saying is look, if people and institutions realize that it's better to hold Bitcoin than it is to hold a country's debt or a company's debt, then effectively what Bitcoin is going to do is Bitcoin is going to trump or eclipse governments. Remember, I keep saying to you guys that the biggest risk that we have right now is that no one wants government debt anymore because they keep devaluing the currency. And the return on government debt is like 1.5, 1.6%. Why would anybody hold that when they could hold Bitcoin? If Bitcoin, why would anyone do it? The only reason is because of the risk in Bitcoin. But as people start to buy this, he's saying that governments may actually lose control because people are not going to buy government debt anymore. They're actually going to just buy, they're just going to buy Bitcoin. And that is when Bitcoin becomes dangerous. So the big thing about what Ray Dalio said isn't the fact that he bought Bitcoin. Great. So the richest man or the biggest hedge fund manager in the world or in the US today has Bitcoin. That's great. He's been pro Bitcoin for a while. The big news here is that what he's actually saying is that if you read between the lines, he's saying that Bitcoin may actually replace government debt and people may hold Bitcoin instead of holding government debt. And when that happens, Bitcoin basically takes over the entire world. And I mean, Rudo, he is actually seeing this happen right in front of our eyes. He's seeing people opt out of the US dollar and say, hey, we don't want the US dollar anymore. We want something else. Rudo, welcome, my man.
Yeah. Thanks, Ran. Hi, everybody. It's a dangerous dollar that we have at the moment.
Rudo, you're on that bouncing ball of yours, right?
Yes, I love my seat. Keeps the back straight, keeps the eyes focused on the screen.
It's making me a bit seasick. But Rudo, tell us what you're looking at here. What's the big alarm bell? Well, good for Bitcoin. Big alarm bell for everybody else.
Bitcoin. I think the nice thing about this is basically, we can confirm everything what was said today. Bitcoin is now asset. But let's start with the DXY. Now you've seen how the DXY. Let's maybe just give you guys a big picture. Have been trending down all the year. All throughout 1986 on its way. There's the big axis. That's the trend line. That's just the trend direction. And as we go up, within we've also can see every time the dollar starts dumping, the DXY, you've got a Bitcoin run. Start of the 2013 run, end up to the 2013 all-time high. There we've got the start of the 2017 run, at the end of the 2017 all-time high, and then obviously the start of our current run. Now, if we start zooming in on the daily, and let's just take away a little bit of the noise and bring that out. What we know now, what have we taught you guys with trading? Once you start making a lower low, that is an indication that we're going to keep on going low. Now, we broke trend at around the 23rd of November. It took us some time to get the test and the confirmation that we're no longer going to be trending up on the smaller time frame trend, which was at around the 15th of April. And yes, today we finally made the lower low. So if we look at this area over here, that's the previous low. So if we were to going to continue onwards in this fight back to reclaim this trend within the DXY, we would not want to see lower lows. That would be a real big warning sign to me. So at the moment, the DXY is giving us a lower low. And then this brings us up to everything that you said today, Rand.
Do you want a strong dollar or a weak dollar? In my mind, we want a weak dollar. We want the dollar to go down because that means that Bitcoin price goes up.
Exactly. So the dollar weakening means it doesn't pay for me to be in dollar. Doesn't pay for me. I need to put my money into assets that's going to protect the buying power of it, because the dollar obviously is not doing that for me. And with these steep trends that we're experiencing at the moment, the evidence is clear as daylight, as you can see.
Okay. So the evidence is clear. The dollar is declining, which is going to cause Bitcoin to go up. It's going to cause people to run away from the dollar. Interest rates, the only way to fix it, the only way to get the dollar to be in demand again is to increase dollar interest rates in the US. Now, if they do increase dollar interest rates in the US, people aren't going to spend. So I guess there's a big risk now that interest rates will have to, either that the US dollar is going to devalue or that the central bank's going to have to increase interest rates. We know the central bank doesn't want to increase interest rates, right? That's a big...
It's going to be very negative.
Because it'll slow down the economy. So it means the dollar is going to devalue further. And if the dollar devalues further, what's going to go up?
Our beautiful friend Bitcoin. And I mean, the evidence is there. Let's touch on the first point. Bitcoin as an asset. The crypto market's got bullish divergence playing out. So in general, this shakeout has now printed its first bit of bullish divergence. For those that understand divergence, we've got a lower low in price and a higher low on the RSI. So we don't need to get too technical on that, but that is a brilliant sign. We got overextended. So now we need to recover. More money wants to come back in. Secondly, the nice thing that you've said about Ethereum leading the way. We don't have any divergence in the alt. So it's a good time to start moving to the better performing projects at the moment, like you mentioned. So there's no divergence in the alts and there's no higher high. So your general Joe Public alt is not going to be doing what you want it to do. So now's the time on the next lows to start shifting your money around, making sure you get it into the better performing coins, because it's going to definitely pay in the long run. And then thirdly, that then gets confirmed by the dominance. Overextended itself, reached both of my downwards targets. And with this being said, Bitcoin is the best marketer that we have. If I look at the statistics, the amount that Bitcoin's being Googled now is, has grown up considerably, and ETH is right on its tail. And with a little bit of a dominance push up to maybe as high as 51, 52, maybe, that would be what we would need to get Bitcoin past this $60,000 range, this funk that it's been in, and then it's game on again. Then there's more grounds for the dominance to fall. There's more grounds for Ethereum to do what it needs to be doing, and for the major alts like your Cardanos and so to really catch up and really then, so that we can almost jump from the one rocket to the next rocket to the next rocket as they start firing them.
Wow. Okay. Ruda, you know why the US dollar, the US dollar, when you look at a US dollar, you know why it's green?
I don't know, buddy. Tell me.
Because it's spinach. Because the people that have spinach hands fell into the green currency, the spinach currency, okay? If you're holding US dollars, look at your hands. You've got spinach hands.
Let's prove mine's not spinach, guys.
Me too. No spinach, nothing.
Guys, I love you madly. I love you to bits. We've got to cut the stream because otherwise YouTube's just going to penalize us. Love you madly. Sheldino, we will see you again tomorrow, 10 a.m. EST. Ruda, we will see you again tomorrow. Love you guys. And to the community, love you guys. Why don't you join us? Be a farmer. We're going to post this on Twitter. We're going to post this on Instagram. And then you can just add your picture on it. And then you can farm with us. Yeah, there we go. Just farm with us. Send us your photos. Put them on Instagram. Remember, if you want free school, that is on Instagram only. If you want Banter bags, that is here. We're going to select the bags winners here and on Twitter. Guys, love you guys. I'm going to stay in touch with you guys on my Twitter if this market moves. Be safe out there. Trade well, my friends.
Crypto Banter is a social podcast for entertainment purposes only. All opinion,